What happened with silver's price on December the 12th was more than just your average smackdown. No, there was a whole lot more to it than that. We're going to try to unpack what had occurred and what we can look forward to in the week ahead with silver as we explore. It's not so much the movement in terms of silver's price, although that was a little unusual that happened there. It absolutely got crushed after reaching a record high on Friday, or very early Friday, in fact, an overnight trading. But once the markets opened up in New York by about 10 o'clock Eastern time, in fact, a little before that, we saw volume pick up greatly. And that increase in volume caused a massive downward movement in the price of silver from well over $64 an ounce. In fact, the high on that night was, or that overnight was $64.69. And then it got smacked down to $60.75. But then by the end of the trading day, it had recovered after the volume really tapered off to $61.99. Now, again, those numbers, even though, it's pretty wild to see silver trading at almost $65 an ounce, nonetheless, the movement of the silver's price is, even though it's a big deal, what's behind this is really even bigger than that. It's the volume of trading. The dude over on the X platform did a post about it. Now, I don't know that I necessarily agree with his analysis of it, but I'm also not ruling it out. I want to be open-minded to it as well. He says the silver market traded over 1 billion paper ounces to manipulate the price down. So that is after the numbers have come out from the COMEX there. The COMEX had 22 deliveries and the LBMA had 400. And then he says, how much longer can the fraud go on? What will the next week bring? And then he says, stack the physical. And I certainly agree with that. Stacking the physical, well, they can't manipulate that if you feel that it's what's going on. My friends at Summit Metals, they're there. If there's a dip in silver's price, and I believe that it's a good time to buy whenever there are dips. No one knows where the metal prices are going to go. And I always encourage folks, whenever you do buy, to understand that the price could fall even more when you buy. So with that being said, check them out with the link in the description below. Experience their great customer service for yourself. But what does all of this mean? Well, essentially, it's a surge in the COMEX silver futures trading volume. And we saw these contracts, about 187,300 of them. And that's over 936 million ounces. But of course, the numbers show about 1.1 billion. And how does that pair? But with the other trades that we've seen? Well, fairly recently we did see trades around there, a little bit over that. A little bit under that, rather, trading the amount of silver that is mined annually and traded in one day. That's a pretty big deal. And I went and looked this up and see how it compares with other trading days, and this was a big deal, no question about it. Now, when you think about that kind of movement, that kind of volume, whether or not it's profit-taking, of course, usually there's a lot of activity that happens, about within an hour after the market's open. And that is not unusual. Profit-taking is not unusual either. Selling, and of course, there could be occurring. In other words, naturally, the natural market very well could play a big role in this. But I theorize that perhaps maybe that the big bullion banks may see blood in the streets in terms of the profit-taking and compound it and stack onto it, and it might be legal to do. I don't know. But nonetheless, when you look at that volume and with the exchange for physical trades that we're seeing here in London, and some of that things, some people think that is what is fueling some of the narratives out there for price suppression, compared to 22 physical deliveries on the COMEX. But I don't know how they measure those deliveries. What is involved in that? How does London do it compared to the COMEX? It could just be two different situations and how that occurs. But remember, most people, when they buy and sell, are not actually taking the physical, as opposed to some that are buying, contract size bars like David Bateman I've talked about. But, I think the more the physical that's taken off the market, the more pressure is going to be put on. But most people, when they trade in those arenas, they are simply trading paper for the representation of the silver, not the actual metal itself. And so that's where it is. What's happening here with silver prices? We saw them reach the record highs early on Friday, and we know what's demand, where this is coming from, industrial demand, and that is something that's been a constant for the past 5 years now, and likely it's going to happen next year in 2026. So we'll see how that plays out. But there are seeing what's going on with the silver squeeze movement that continues to see systemic risk from some of these short positions. If physical demand overwhelms the inventories, which is why I believe in holding the metal through the long course of time. But what does this trading volume mean, and how does it compare with other days? Well, the largest daily trading volume for silver futures on the COMEX occurred on April the 25th, 2011, and we know that's around the time when silver's prices last reached a record high. Of course, nominally, it's not anywhere near where it is right now, but adjusted for inflation, we still have a ways to go. But anyway, 319,204 contracts were traded. And each standard contract represents 5,000 troy ounces. That's 5 contract-sized bars. So that means that it equates to 1.596 billion ounces. So 1.596, almost 1.6 billion ounces compared to the just over 1 billion ounces that were traded on Friday. So we have a ways to go to reach the record, but I did some other research to double check that. And they're saying that that it's not anywhere near that. That the largest volume, daily volume, that occurred in a single day recorded in the LBMA data was 1.015 billion ounces on June 4th, 2019. And we also saw recent high volumes that occurred on February the 1st, 2021. We recognize that as the silver squeeze movement that occurred with 1.006 billion ounces traded on the London over-the-counter market. Of course, how are these done? How do these compare with other normal days, and how does that tie in with the COMEX? And what, don't we add those all together? I'm not sure, but one are COMEX numbers and the other are LBMA numbers. A little confusing there, but nonetheless, I think no matter how you interpret the data, over 1 billion ounces traded in a day, and if you feel there was an attempt to smack the price down, to tamp the price down, well, it only had a minimal impact when it's all said and done, because silver is still trading pretty much right at $62 right now. Now, every Sunday night on this channel, I do a market watch. I'm the only channel that does it consistently, and the one that started it here, where we watch the markets as they open up in Hong Kong, and if we're on long enough, in Shanghai. But the Asian markets open up, and we watch them and see what happens. And the last couple of weeks have been very interesting to see what is going on with silver. And usually when we saw days like what we saw on the 12th, on Friday, we see a pretty rapid recovery. That has been the case really pretty much for most of the year. And so these smackdowns occur, volatility, and then boom, it shoots right back up again. Will that happen again when the markets open up here tonight as I record this video? It'll be very interesting to see. But nonetheless, I think it's fascinating, and it's great that the people are keeping track of this, like the dude, and it'll be very interesting to see how this plays out. But one thing is for sure, these markets are on fire. Silver is, most people feel that it is poised to continue to increase in price, and we're not near the top yet. Who knows? No one really truly does. But one other thing we have to think about in this market is to try to be as, kind of look at both sides of the fence on this and see what is affecting the market and how it moves so quickly. And I think a lot of that has to do with the fact that there's the Commitment of Traders report showing a steady covering of the shorts by the commercials, according to Oak Hill's boy over on the X platform. And essentially it means that the open interest continues to drop, and commercial buying is very bullish for silver. So there's a couple of points he makes that after buying, as the price has gone up a bit and move in with a lot of buying to goose up the price up to lure in a bunch of over-leveraged longs. So this is kind of manipulation if you're timing the markets and you're working in this kind of psychology that this could work. Number 2 is selling the high to push the price down, forcing the over-leveraged to sell en masse before their margin evaporates. And then the third is after making nice profit from that, and that's why the term profit taking comes from, is it makes sense. You buy the bottom to accumulate more longs. You don't have to say thank you to the over-leveraged traders. If you repeat that over and over and make a lot of money and slowly change your net short positions to net long, banks who are net short are not so defenseless. Traders who are very experienced at making a lot of money on these kinds of moves, and he says that we're currently in the middle of number 2. And again, as a reminder, that means selling the high to push the price down, forcing the over-leveraged to sell in great volume before the margin evaporates. And so he thinks that we're going to see that continue for the next few more days. And I think this is a brilliant post by this individual, Oak Hills boy. And, I don't really play around in that market. I buy as a hedge for silver. I buy it to preserve my wealth over the long course of time. I'm not really worried about making money on trades or anything like that, but I can see how some would be, especially if you understand the psychology of the market. You're looking at technical analysis, and you feel like the trend is your friend, especially with silver's price moving up in a northerly direction. And I believe that's what this individual feels. So there it is. Fascinating indeed. Let me know what your thoughts are. But over 1 billion ounces traded in a single day is a huge deal, folks. It doesn't happen too often. That's for sure. I hope you found this video informative, insightful, and educational. We'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.